Hey everybody, CryptoStew here again, and in this video we're going to start to piece everything together and perhaps build a simple trading strategy that you could go out and start testing in the live markets. So trading strategies take time to develop. You need to understand what your own strategy is going to be, but you need to start somewhere. So what we're going to do is we're going to take bits and pieces from everything that we've discussed in this series so far and have a look at a strategy that might make sense. So with all that being considered, let's take a look at the Bitcoin daily chart now, and we're going to zoom out. It's always worthwhile zooming out and having a look at what the bigger picture is doing. So with this trend line here, and as I said, my trend lines are fairly subjective, but we're in an uptrend, okay, and this trend line hasn't really been broken, okay, so we're still in that uptrend. Price is above the 200-day moving average. The 20 period moving average is above the 200 period moving average, and so we are in a bullish market, okay, environment. And at the time of making this video, it's February in 2025. There's a lot of bullish sentiment around, particularly in relation to Bitcoin. And that ties into what we're seeing here. What we can also see, though, is that since the end of November, we've been in very much a range-bound price action. So this 92,000 to 106,000, there's a clear support and resistance levels here. And so until we break out of this, we're in this range-bound environment, and price action can be quite choppy during these range-bound periods. And so market structure can be quite difficult to use in a range-bound market. So I'm going to remove that just now, and the market structure is much better when we're looking at a trending market. So the analysis here, and if we look at the RSI, we're kind of in the middle of the RSI. We're not overbought, we're not oversold, and that makes sense because we're in this range. So scrolling out, we have an overall bullish bias. Prices look as if it's rebounding from an area of support, and that's horizontal support and trendline support, and it has just broken back above this 20 period moving average. So my bias looking at this is bullish. So what I would then probably do is go down to a lower time frame chart and see what that looks like. So from the daily, let's move down to the 1 hour chart and see what that's looking like. So we're getting a lower time frame opinion now and way to view the market. So in the lower time frame, and we can see our higher time frame support and resistance levels, we can see our trend line. What we can also see is that the 20 period moving average has crossed above the 200 period moving average. And so on the 1 hour time frame, we are also looking bullish. Now, we did go overbought here, and as you can see right now, price is beginning to sell off. So let's look at the 5-minute chart. Actually, if we go back to the 1 hour chart here, we can see that there's some resistance in this area here. In fact, this whole area has proven to be resistance in the recent past. And so you can see that price is reacting to this at the moment, and it's starting to sell off. So there's every possibility here that price could come back down and test these lows. But if we look at this based on a strategy, we have to have some rules. So in our daily chart, our 200 period, our 20 period EMA is above our 200 period. On the hourly, the 20 period is above the 200. So we're bullish. And then if we can go down to the 5-minute chart, and this could be where we take our trade entries. So what we might be looking for is a cross. Where does the 20 period cross the 200 period? And you see we had this cross here, so that might have been a good opportunity to enter, and that would line up roughly with when the 20 was passing the 200 on the hourly chart. We could then look to seeing perhaps wanting to wait for a retracement and then price closing back above the 20 period moving average. So this could have been an entry. Let me just get my... You could have had an entry in here where we're bullish on the 1 hour, we're bullish on the daily, and then on the 5-minute chart, we've had a nice retracement. We're kind of using the 200 period moving average as support. Price is then closed above the 20 period moving average, and we could enter a trade here. If we just simulate a long position, we could use a stop loss below these lows here, and we could target this swing high, and we get a nice risk to reward of 1.36, or perhaps we target this level of hourly resistance that we'd identified on the hourly chart, and that gives us a better risk to reward. Or you simply follow price and wait for price to close below the 20 period moving average, and that would have got you out about here, and that would have been a 2.09 risk to reward trade. So we're using multi-time frame analysis here. We are looking at the daily chart for an overall bias. So we could say that if when price is above the 20 period moving average and the 20 period moving average is above the 200 period moving average, we're looking for buy trades on the lower time frame. We then looked at the hourly chart to see that the 20 period was above the 200, and then we went down to the 5-minute, and we created a quick trading strategy here by where we wanted to see price retrace and then close above, and this would have been another good entry here. So price has moved down below the 20 period moving average, and then when it closes back above it, that's where we take our long position. And so if we'd entered the trade over here, then we could have put a stop loss below this wick here, and we could have targeted this resistance, and we would have had a nice 3.5 to risk reward ratio there. So hopefully this gives you some ideas, and you can go out, and I would encourage you to have a look over historical charts and just see how your strategy would work out, and then test it in the live market using small amounts of capital. I personally prefer testing in a live account with small amounts of capital than testing in a demo account. I find it psychologically, it's much better to, you're going to make more realistic decisions if you're using real money, even if it's small amounts of money, than you would do in a demo account. So hopefully that was helpful. As always, if you've got any questions about this, please tag us in the Telegram channel and we'll get back to you as soon as we can. Thanks.